Good morning, friends. Today it's 11th of Feb 2025, and the technical outlook for Nifty and Bank Nifty for intraday and short-term time frame is as follows. The week has started on a negative note, and yesterday across the sectors, the indices has indicated and ended in red. Nifty 50 slipped down from the highs of 23,568 to 23,316 before ending the session at 23,381, down 0.76%. We have been mentioning since last few sessions that the long positions are being uh, covered by the short sellers at a higher levels in respect of the option studies. So hedged long strategies or positions are visible, and there are heavy sellers at a higher strike price, and that situation remains the same. We can see heavy option writers at a higher strike price, while as per the price study, the downside looks capped. We continue to hold the same outlook. Nifty 50, which ended last session at 23,381, holds the important support at 23,200 immediate and 22,200 for the week as a whole. Buy on dip with the covered long positions can be looked into, and the index need to sustain over and above 23,600 mark in order to witness fresh buying interest for the higher levels of 23,850, 24,200 mark in days to come. Bank Nifty index continues to outperform Nifty, and yesterday also it ended down 0.35%, outperforming Nifty. It ended below 50,000 mark at 49,981 Bank Nifty spot. As per the price study, 49,000, 49,500 remains an important support, and the oscillators on both Nifty and Bank Nifty are not that bearish. It indicates that the downside dips can witness fresh buying interest. At the same time, as mentioned earlier, Bank Nifty has a strong midterm resistance zone between 51,500 52,000 mark, which need to be held in weeks to come in order to nullify the ongoing weaknesses. As per the price study, shorts term bias remains buy on dip. Dips towards 49,500 49,000 zone can be looked for hedged long strategies. In that segment, private banks still holds relatively positive outcome as per the price study, but option studies are still not that positive. The heavy sellers are active at a higher strike price, indicating that longs are being hedged by shorts options at a higher strike. So this is a theta decay strategies which most of the uh, heavyweight counters are indicating. The broader market advanced decline ratio is also not very favorable, as it has ended in deep red yesterday. Net, the market continues to be within a time and price consolidation, and we need more signals for the confirmation of bottoming out of both Nifty as well as Bank Nifty. As of now, in our short-term time frame period, as per the price study, downside looks capped, and thus dips will be looked for fresh long hedged entries. For the day today, Nifty spot remains buy on dip towards 23,200 mark. As per the futures levels, dips towards 23,320 and 23,150 can be looked for buying, while 23,640, 23,740 will act as a resistance, keeping a stop of 50 odd points. As per the weekly OI data for 13th of Feb, maximum call buildup is at around 23,700 strike, while the maximum put buildup is at 22,500 strike, which is quite down from the current levels. Bank Nifty futures, which ended last session at 50,234, can be looked for buy on dips. 49,700, 49,500 are the intraday supports, while 50,750 and 51,050 are intraday resistances. You need to maintain a stop of 100 odd points for the day traders. As per the monthly OI data, 27th of Feb, maximum call buildup is at 51,000 strike, and maximum put buildup is at 49,000 strike. So that indicates that as per the price and OI data, 49,000 strike remains important support for bulls on a short-term time frame. So buy on dip remains the outlook for both Nifty and Bank Nifty, but it need to be covered and avoid leverage long positions. Thank you.